डिस्पाइट वट एवर प्रोफेशन यू आर, मनी हैज टाइम वैल्यू. जो 1 रुपया आज मिल रहा है वो 1 रुपया 10 दिन बाद अगर मिलेगा तो उसका वैल्यू डिफरेंट होगा.
What sectors do you see picking up and booming?
At the end of the day, the point of capital is to make returns.
If we talk about investing in private markets,
For you to be able to invest into private markets, just because you have money, that doesn't make you an angel investor.
what returns? Is there something that is promised?
It's sometimes more than 25%.
What's the salary range a fresh out of college student can expect if they make a career in investment banking?
Can go as high as 60 lakh per annum, 75 lakh per annum. As much as, we are in the business of making great returns, we are also in the business of creating news of tomorrow.
So who are these investors that you mentioned?
There are many categories. Angel investors, there are micro VCs, there are VCs, there are HNIs, there are family offices, there are ultra HNIs as well.
How do they make money from that?
One thing, one very small thing which I want, at least your viewers to understand is,
Just to begin the things, can you tell the audience about your journey from where you are and what you've been doing so far?
I'll start with who I am, right? So, Krishna Dev Pathak, longish kind of name. So, essentially, I'm an investment banker in the private markets. And before I get in, more granularity as to what it means, I'll tell you what it means, how I really, so whenever I'm invited to a panel or a mixer, so how do I start my introduction, right? Essentially to, also connect on a layman's perspective, right? With a tad bit of sensationalization. I say that I'm Seema Auntie from Indian Matchmaking, making people who want to be compatible get together, right? That's essentially what I do. However, there are, again, layers and plethora of things that we do in that process. But yes, essentially, Seema Auntie, making two people get connected, helping them find compatibility. That's essentially what I do. But again, for the granular understanding of what I do, right? Like I said, so I'm an investment banker in the private markets, helping startups raise funds. So when I say private markets, I'm talking about companies which have not gone public yet, right? Now, again, there are many layers and there are many stages and scales of companies, right? Because हम unlisted companies की बात कर रहे हैं, right? So the stage in which I deal in is early to growth stages, essentially meaning companies who are looking to raise funds, essentially companies who are seed stage to pre-series A, pre-series B kind of companies, right? Where the fundraise ticket size is somewhere between, $1 million up to 25. So that's the place where I come into the picture.
So take me one stage deeper. Like what's the whole process of you finding out companies, or do they reach out to you? Do you find them? What's the behind the scenes story of that?
Okay, so very interesting. So the exact question which you've asked me, that process is called deal scouting. Okay, which is essentially either deal scouting essentially means that we as bankers, we find deals which are worthy of investment, right? Now, I used a term called worthy, right? Now, that is not something that we are determining. That's something that the market determines. Now, there are various factors, nuances on which a company gets funded versus a company which doesn't get funded, right? Essentially, we have to be cognizant of some statistics, right? Before I get into the process of deal scouting, there are more than 7,000 companies annually in India who are unable to raise funds.
Okay.
And
Unable
to raise funds, not even a single penny, right? Essentially, when we are, scouting for deals, we are looking for deals, we are essentially trying to map supply to demand, demand to supply, right? Demand is essentially the investors who are wanting good deals to fund, right? Demand is also great founders or good companies, great ideas who are wanting capital, right? So I'll tell you, so as a banker, right, you're not on either sides, you're in between, right? You are liaisoning between the founder and the investor, right? Essentially helping the founder find the right kind of capital and have the investor find the right kind of opportunities. Now, what is the right opportunity? So before I even dive further deeper into, what are the nuanced thesis which is prevalent in the market, right? What kind of companies get funded and what are the 1,000 different parameters that go into that decision making. मैं सिर्फ scouting के भी बात करता हूँ. because again everything is very connected, right? That's why I'm like trying very hard to not say something which will be incomplete in context. So essentially deal scouting mein we try to find companies. The way in which we find is definitely through secondary sources. There are also primary sources, but it's also about credibility. So if you're a credible banker in the ecosystem, founders are aware of, founders will reach out to you, right? That's called an organic, because the deals are coming to us, right? Essentially people in the ecosystem work on the outgoing process, right, where people are going out to find opportunities, right, which we also do, right? But if you are a, like I said, I use the word credible. If you're a credible banker, your ratios would be 60-40 or 70-30, where 70% of the deals are inflow and 30% or 40% is out, you going out and asking, hey, are you looking to raise funds, right? So thankfully for me and for us, that statistic is more towards organic. So that is good, which essentially also means that either we are good bankers, or B, we are very well connected to the ecosystem, or C, it's all of the above, right? But it's good to have. It's a good to have.
So who are these investors that you mentioned?
There are many categories. So there are angel investors, there are micro VCs, there are VCs, there are HNIs, there are family offices, there are ultra HNIs as well. Okay. So I'll try and focus a little bit on the VCs and the micro VCs and family offices, because these are the kind of institutional investors. I use the word institutional whom we deal with.
Okay.
Right. So this is a little from the legal lens, right? So if you look at SEBI guidelines, right? So SEBI has put or classified funds into 3 categories. You're either a CAT Fund 1, CAT Fund 2, or CAT Fund 3, right? They are essentially called CAT 1, CAT 2, and CAT 3, right? So CAT 1s are essentially funds which invest into startups, right? CAT 2 are the ones who can invest in other opportunities as well, which is small and medium business enterprises, which are essentially not startups, right? However, CAT 1s have a mandate of investing in startups, right? And I'll also come to the definition of what is a startup and why this segregation matters so much. And then there is CAT 3, which is short term, very complex strategies. CAT 3 fund, it's a hedge fund, right? So CAT 3 fund is a hedge fund, right? So I said micro VCs, right? So essentially, VCs or venture capitalists, in a sense, are institutional investors who deploy capital in promise of great returns. That is a very, 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 a broad way in which I can classify them. However, the way in which they function, it's very different, right? There are essentially limited partners. These limited partners, again, this is a bookish kind of definition, which I think people will say ki limited partners are essentially partners whose exposure is limited to the amount of capital they've invested. ठीक है? इसके बोलने का मतलब क्या है, इसका तात्पर्य क्या है, राइट? इट एसेंशियली मीन्स कि उन्होंने जितना पैसा डाला है उनकी एक्सपोजर उतने तक ही लिमिटेड है. They are not responsible for other things. Now, why is it important? I'll tell you. Essentially, if you're a founder and you are speaking with a investor, right? You're talking to the GP or the general partner. You're not talking to the LP. What is the difference? An LP pools in the money. Sorry, an LP invests the money. A GP pools in the money and makes a corpus. Corpus का मतलब होता है, the total amount of money that he or she has accumulated and calls it a fund. For example, there's a 100 crore fund. Now, 100 crore fund is, let's say, being managed by Sanskar, right? Sanskar becomes a GP. For example, if Krishna has put in the money, Krishna becomes the LP. Now, Sanskar is going to promise Krishna that, hey, my fund cycle is 7 years. In 7 years, I'm going to give you this much percentage of return, right? And there are, the VC math is very different. There are many other nuances in play, which, believe me, when we were studying finance, be it people who have done MBA, it doesn't matter. The way in which you look at numbers, that determines how the math works, right? Which is very interesting. Let's say a great company, right? And VCs follow a thesis, which is ki, let's say I am a VC fund which invests between seed to series A. I write checks of, let's say, $500K to $1.5 million. and do follow-on investments of, let's say, $1 million, and I invest in enterprise SaaS applications. Okay? There are many other nuances to the thesis as well, but both, on a very larger scale, let's say this. Okay? Now, let's say you're an opportunity which is very well aligned with them. Okay? Which is exactly matching the thesis. But there might be a chance that they might not invest in you. Right? Now, this poses a question as to, why. Right? And there are many aspects of how the industry functions versus how the math works. Everything is connected, right? And maybe towards the later, I'll also try to explain, what is the interconnectedness of this whole ecosystem and who's dependent on whom, right? But essentially, the reason why you might not get invested is because, let's say, you are an opportunity, because essentially you're an opportunity, right? Who's trying to raise funds at a time when the market is in the upcycle. इसका मतलब है you can command very high valuations.
You mentioned about having subsequent rounds.
Yes.
So abhi, I want to know ki how does a family office or a VC for that matter make money? Like, let's say they have invested their money into particular, let's say, a startup. How do they make money from that?
Okay, good question. So first thing, VCs and family offices, they invest money essentially, right? But the format or the form of money is a little different. Family offices are usually have more patience. They're more patient capital. VCs ka one thing which you need to keep into consideration is VCs have a fund cycle. They have a fund life, right? 7 years, 7+2, whatever, right? Which means in that 7 years of time, they need to give a certain kind of return to their LPs. LPs are the people who had put in the money, right? Now, how do you generate returns? How do you generate value, right? And again, there are different ways to approach it. Essentially, let's say you are managing 100 crores. In 5 years or 6 years, you need to invest this 100 crores. There are also different formats where, let's say, you have invested 80 crores and you have kept 20 crores for follow-on investments. Which means कि अगर आपने आज किसी कंपनी में इन्वेस्ट किया है, when the subsequent round is happening, you would ideally want to invest more. Because आप जब next round raise होगा, at that point of time, your ownership will get diluted. So there are certain clauses which allows you to maintain your stakeholdership by investing more money, right? And essentially, if you have backed the company, you would want to keep supporting it further and further, right? Not just with your, guidance and support, but even with your, even with your capital, right? So how does this whole return come into the picture, right? First of all, let's clarify what is return, right? There are two ways to look at it. I gave a person, I gave $100 to person B. The person B gave back $150, right? The value is $50, right? For example, the same person gave me $50 after 10 days. Is the value of the money same? No. Because in the first scenario, I was getting $50 the very immediate day, right? Whereas in the second scenario, it's after 10 days. There are, and believe me, somebody who has studied finance for 5 years, right? Despite whatever profession you are, there is one thing which you can't compromise on, which is non-negotiable for you to understand. That is, money has time value. Okay? जो ₹1 आज मिल रहा है वो ₹1 10 दिन बाद अगर मिलेगा तो उसका वैल्यू डिफरेंट होगा, right? Essentially that is what it means, right? And for any bachelor student who's taken a first class of finance, first class rather, TVM, time value of money, right? And believe me, that is something which will be relevant for you even when you're 80s. Okay, time value of money, never forget that. So essentially there are two ways to look at return. Okay, first is the total value that your capital has generated. Okay, which means कि for example 3x return अगर आया है, right? 3x sounds very interesting. 100 crore investment, 300 crores. It's not 300 crores, okay, by the way, because there's also a fee which the general partners make. The general partners have to take salaries, right? So it's essentially, how it works within the hedge funds as well. That number, it's 220, which means कि if it's a 100 crore fund, 2% annually will be the management fees, which means the cost that goes into, salaries, other stuff, and 20% of the profits, which is a very healthy figure, right? If you are, I mean, if you're a seasoned VC who really knows how to make investments, the right kind of investments, right? That 20% is a huge, it's a really good number, right? However, again, a lot of VCs have also burnt money in the up cycle of 2021 because there were higher valuations. So we'll get to all of that. But yeah, so one thing, one very small thing which I want, I mean, at least your viewers to understand is that there is a difference between a 3x return versus an IRR of 25%, right? IRR matlab the internal rate of return, right? So when I say 3x return, 3x return is not time sensitive, which means that value can be generated in 10 years of time, right? But that IRR will be very small then, right? Essentially, if you're putting in money, you're looking at IRR because that essentially means, okay, in this much amount of time, this is the value which the money has generated. Why is IRR important? Because had you invested that money somewhere else or in some other, assets, it would have generated maybe a higher return in less period of time. Ultimately, at the end of the day, the point of capital is, I understand, it's also diversification, but at the end of the day, the point of capital is to make returns, right? And that's also one of the reasons why these LPs who have other businesses, who have many other investments, they pull investments into, venture capital and the startup ecosystem, because again, the Bharat growth story is unlike anything, right? It's absolutely, the growth is unprecedented. But so yeah, essentially they're putting in money to get a certain kind of return. They are putting in money to get an IRR out of it, right? 3x return, 5x return, but after 10 years. And this is also, realized returns and unrealized returns, right? Which means there are certain portfolios in say exits lena abhi bhi baki hai, right? So a 3x return, 4x return sounds very exciting. But is it worth the time for which the capital was invested? That is solved by IRR, right? So this is something, which a lot of founders don't understand, because again, to them, the venture is like the baby, right? They have created it from day zero, day one, right? So they are very emotional about it. So again, with respect to this, right, a lot of liasoning and a lot of guidance and mentorship comes from the bankers side as well, where we tell them that you're a great opportunity for them, but again, they are looking at your growth. For example, there are great medical plays which I have seen. Now these are plays which will become mega in, let's say, 10 years, 15 years of time, but it's been passed by god, I mean, almost 90%, 95% of the VCs, early VCs. The only reason being the path to commercialization time है उसमें भी, right?
Right.
Which means that the amount of IRR which they want to make, right, it will not be realized in their fund cycles time.
Right.
So that's also one of the reasons why ventures don't get funded. But believe me, and see, nobody's wrong, right? At the end of the day, everybody's codependent on each other. The GP is codependent on the LP's money. The LP is codependent on the GP to make great returns. The GP is responsible for finding great opportunities. Great opportunities are not just great; they have to also shape themselves to become right opportunities for them, right? Because like I told you, right, a great opportunity but doesn't fit the thesis, not get funded. So that is essentially what goes into play.
If we talk about investing in private markets, there is angel investing, there are VCs, right? But like, because there are higher returns, right? Higher risk as well. So if an individual, let's say, wants to get a taste of it, right? They want to invest into private companies, right? So firstly, what is a minimum ticket size that they can invest in? And for someone who is just an individual, just a layman, how can they invest in a particular company, a private company?
For you to be able to invest into private markets, right, question is, just because you have money, that doesn't make you an angel investor. Essentially, you need to also be coming from a certain kind of background which makes sense for you to invest into that kind of companies, right? For example, you're a B2B SaaS guy. Take care. For example, you've worked 10, 15 years in tech, right? You know everything about, how a SaaS product is made, how an enterprise application actually works, how it's integrated, right? What are the hurdles of, doing B2B sales cycle kitni lambi hoti hai, other aspects. But let's say the company which has come to, come for investment is, let's say, a consumer brands company, and you know nothing about consumer brands. So at that point of time, the foolishness is on both the parties, right? The foolishness is also of the investor who has put in money, because their ability, see, essentially you're in the business of making two kinds of bets: safe and visible bets, right? So the question is, what, with what ideology, with what thesis, with what analysis are you placing that bet? That is for the investor who's an angel investor. The question is also for the founder. What kind of value add will they be able to provide apart from capital? That becomes a question mark, right? For individuals to essentially start investing in private markets, there are many platforms, there are many syndicates who raise small checks. So, for example, 5 lakh kind of check, 10 lakh kind of check, right? Where essentially you will not be named on the cap table. You, along with, let's say, 100 other people, will be named as one entity, which is the entity through which you are investing, the platform or the syndicate, whatever it is, and that will be enlisted on the cap table. But at least you are able to invest and make a realized kind of, a return. But even these platforms and syndicates prefer, if you are somebody who has prior VC experience, or is somebody who's, let's say, from a very prominent, you know let's say from a prominent company, you've built companies, you have a sense of entrepreneurship, you understand the, the pros and the cons, the risks and the rewards of this ecosystem, only then it will make sense, right? So that these are few essential things which one shouldn't, miss out when they are trying to explore private markets. Yeah.
Now, obviously, there are various factors and a big timeline as well. But what returns does a GP promise the LP? Like, is there something that is promised?
There are different percentages that work at different scales. It also works with the kind of person that you're raising money from. If it's, let's say, somebody who has extremely patient capital, who doesn't mind, right? And if you, let's say, you have a bunch of those people and you have sourced money from them and you've made a fund, right? Let's say to them, the return, I talked about the IRR, right? The IRR is not something, that's a huge demand from them. They are interested in the total value that that the capital is generating. There are funds which are jinke, LPs are essentially these big conglomerates, and they are the 100% when they have, put in majority of the amount into that fund. There are also funds of that sort. So again, with them, let's say, there obviously it's to make returns, right, in the capital invested, but it's primarily to also find opportunities that align with some of their businesses, some of the conglomerates businesses. For example, it's a, let's say, I'm trying not to name any, right? For example, there is a fund which has majority of its money pulled in from, let's say, a conglomerate which is into consumer brands, right? So essentially the mandate or the thesis which this particular fund will follow will be to find D2C companies, will be to find great consumer brands, consumer tech companies, or other businesses which can support their existing businesses, right? These are the different formats, but essentially it's not a black and white answer again. So it ranges, right? For example, to them it's promised 15%, 17%, 25%, right? Some cases, if it's very expensive capital that the GPs have raised, it's sometimes more than 25%, right? And which essentially means that the startups need to make much more than that, right? So these are the various levers which play, when these discussions happen. But yeah.
Coming to your job description of investment banking. So, firstly, how can somebody like get into it?
It's preferred, and I'm only focusing on investment banking. I'm not talking about VCs or entrepreneurship, right? Investment banking, definitely you need to be a good finance professional. I'll go a little bit deeper, right? It's a must have that you are academically very bright, right? It's a must have that you are, absolutely curious about everything. It's a must have that you're abreast of everything that's happening in the ecosystem, right? Who's funding whom, what kind of, sectors are something which, what are the sunset sectors now, what are the sunrise sectors now, right? So basically general know-how should be very high, right? uh, but apart from all these things, right, which is, part and parcel of any profession that you pursue, You need to have very, very good business logic. Business sense needs to be very good, right? You need to understand that it's a multifaceted approach, which means ki not one shoe fits all. And see, essentially, you're catering to different stakeholders, and you have to cater to all of them concurrently, which means you need to have a very good sense of relationship management and client servicing. You can't be insincere in this practice. And believe me, there are so many times, right? No matter how much you rely on tech, no matter how much you rely on your alarms, your calendars, your reminders, no matter how much you follow and practice, the whole second brain approach of note taking and cataloging, labeling. I do hundreds of those things. Despite that, maybe in 7 days, 10 days, there'll be one thing which will get missed, right? There'll be one, let's say, WhatsApp communication which was supposed to send but will get missed. So sincerity is extremely important in this, right? Authenticity is very important. You know a lot about business, but why do I say authenticity? Because if you're authentic, your listening also improves, because you're listening to business problems in an authentic way. It's not a caselet in a casebook, jahan per a certain kind of framework of a business is mentioned, and the transcript is mentioned that the owner has this problem and let's say want to focus on growth, or let's say want to focus on profitability. It's not like that. In order for you to have an authentic approach, first you need to understand how to listen authentically. And believe me, the moment you crack this now, we talk a lot about asymmetrical returns in this industry, right? Asymmetrical learning आपकी वहीं चालू हो जाएगी. The moment you become authentic in everything, right? If it's a problem, the problem may seem a certain way, but what is the problem really, right? You need to get at the crux of things. So I talked about being curious, right? Curiosity doesn't, don't sate your curiosity on a superficial level, right? Go as deep as you can. And see, you're dealing with tech enabled and tech driven ventures, which means your ability to understand tech also needs to be very high, right? Now that's something which doesn't come with your 5 years or 3 years of studying and learning finance, but it comes with your understanding of, okay, there is something that's a tech infrastructure. Let me understand how the tech stack works, but it's your job to translate to the investors how the tech stack is supposed to interact with the environment, right? Which means what is the business logic of it, which is the business sense of it. So you need to be good at a lot of things, but it's the realization that, boss, you need to be authentic. You need to be very good in terms of your communication, right? You can't think something then say something else. दो चीजें होंगी, या तो आप incomplete, you'll be incomplete in whatever you wanted clarity on, or it'll lead to further miscommunication. And jahan pe, especially in a line of business where you're managing so many different stakeholders, miscommunication is not something that you can afford, right? So you need to be crystal, and being crystal, being curious, it all comes with sincerity. Often people will say कि curiosity के लिए underlying sincerity नहीं होनी चाहिए, right? I'll say spend enough time being curious, you'll understand it's a sincere discipline, right? You need to be disciplined to be curious, right? It's like that.
So, Krishna, tell me, like, what's the salary range fresh out of college student can expect if they make a career in investment banking?
Essentially, let's also categorize, right? For example, somebody has just completed the bachelor's, okay? For them to work into investment banking, that will probably be a long shot. I'm talking about the majority population, right? It'll be a long shot because you don't really have a clear, nuanced understanding and clarity of what you studied, right? And believe me, academics don't prove for that. But at least, great grades can at least get you into the door, or at least can get you closer to the door, if not open the door, right? So at that point of time, getting into investment banking, especially, I'm only talking about the private markets, right? That in itself is a little challenging, right? Because you are essentially wanting to hire people who already understand, who are either meant to either go in consulting or go in investment banking, but all in all have a great analytical skills, right? And when I say analytical skills, I'm talking about hard and soft, right? You need to be great at Excel, you need to be absolutely great at PowerPoint, but you need to equally be very good at your, soft aspects like business logic, business acumen, and sense. let me focus a little bit more on, and essentially, my recommendation is, definitely get work experience and all, but, preferred is, once you have a master's degree, once you have actually worked on a couple of projects, you are connected to the right kind of people, because see, essentially you're in an ecosystem which talks about access, right? You essentially want to be closer to people which are investors who have access to capital, right? So in order for you to work in an industry like this, it's all about access. So the question is, what is the function of access? How do you solve for access, right? You solve for access by being closer to the people who make the decisions. How do you get closer to them? You have to be, darn good at whatever you do, right? Even if, let's say, it was an event you did in college, just taking a very random example, right? For example, you did a forensic analysis kind of event, right? You got a gold medal in it, good, but what does it translate? Does it translate that you're good at winning competitions, or does it translate that you're good at understanding businesses and making a sense out of it, right? So essentially, few non-negotiables, like I told you, at the start of this podcast as well, you need to be bloody darn good at whatever you do, right? But there are a lot of must-haves, there are a lot of good to haves, and there are a lot of, things that look very good from a brownie point perspective. If you have really made the cut, I think you can start by expecting, it might sound a little, unusual, but you can start by expecting as low as 6 lakh per annum, right? Which sounds crazy. And it can go as high as 60 lakh per annum, 75 lakh per annum.
For a fresh.
No, I'm not talking about fresher. I'm talking about, investment bankers in this. I'm only talking about the base, the fixed, the salary aspect of it, right?
So
Well,
what more money do you make then? Like
you-
apart from the
Oh,
salaries.
investment banking in private markets is not about salaries. It's about commissions.
Okay.
So when you close a deal, you make a cut. Okay, so
let's dive deeper into that.
Okay. So essentially, there are two commercials to investment banking and private markets, right? The first aspect is, I'm talking from a person who's working in investment banking. First is you make a salary, right? That salary is a very qualitative figure of what all you bring to the firm, right? And if you have the capability of actually supporting the company's P&L, you'll be paid very well. Okay, but that's something which is good, right? That doesn't settle score. Okay, what essentially, I mean, along, apart from the impact and everything, that at least I'm very passionate about the impact and the kind of companies that I work with, right? But we are also in the business of making money. The actual money is made, in the deals that you close, because in the deals that you close, your firm essentially makes a certain percentage out of the whole deal value, right? For example, 100 crore की round है, just taking a very small example, 100 crore की round है. For example, your success fee, which is the take rate, right? Which is the percentage which you are charging the founder on, when I'll help you get all the funds. At that point of time, I'll take 5% out of it. That's a pretty good figure, right? It's a 5 crore figure for a 100 crore kind of fundraise, right? So if the firm is making 5 crores, right, the person who was managing that deal, which is an employee, not the owner of the firm, right? The employee also makes a percentage of what the firm owns, right? Now, for example, let's say it's 10%, which means you essentially make 50 lakh rupees in one deal.
In one deal.
Right? So essentially, this is the maths that works in investment banking. However, believe me when I say this, there are very, very, very few, investment banking firms in India which give, more than 2%, 3%, or 5% to their employees who worked on, who executed that deal. So it's less than that. But I know firms that pay, north of 5%, that pay up till 10% to the employee on the deals that they close, which is a very good figure. So essentially, that's so it's not the base salary, definitely. It's the commissions, it's the take rate.
And how many deals does a good investment banker close in, let's say, a month or a year? Like, how does that pan out?
So that's a very good question from somebody who's, outside the ecosystem and looking in, right? Essentially, a firm's P&L, an investment banking firm's P&L is, the number of deals that you closed, the kind of revenue that you generated from it, and usse you are, your contribution margin 1, whatever your costs are, contribution margin 2, whatever your costs are. So it is also a function of, what kind of stage you deal in. Now, for example, I deal with ventures that raise north of $1 million, which means 8 crore ke upar, up till $25 million, right? We all have our sweet spots, which means if we have to immediately onboard a deal, which fundraise, which spectrum would we feel comfortable in? Now, for example, I feel comfortable dealing with, ensuring founders ki, okay, if you're raising between $3 to $8 million, through and through, I can, completely support you. Okay. Now the question is also on bandwidth, right? And this is a word which you'll hear, if you, especially if you're working in any profession for that matter. But for us, bandwidth essentially means the amount of time or the amount of space that we have on the daily things that we already have on our plate, and how much of that space and time can we use to onboard more work. More work matlab more mandate, matlab more founders that we will officially like to start working with to help them raise funds. It takes, on an average, right, no matter whatever whoever says, on an average it takes 4 to 8 months for a founder to raise funds. On a very good scenario, it's 4 months, it's 8 months, and there are many scenarios in which founders are unable to raise funds, right? So 4 to 8 months is the general, the time that it takes. So understand that if let's say one employee is working with one founder, which means essentially working on one mandate, which is taking 4 to 8 months, right? It's an awful lot of work. You're not just, you're doing a host of things, right? You're having, first of all, just for you to formally start working with the founder, there is a series of calls that you do. Because, see, if you don't do your diligence, the institutional investor, the moment that they see that a deal has come from an investment banker, वो तो तुरंत delete कर देगा ना. If they see कि if they know कि it's not a credible banker, why will they even spend 2 seconds, right? So first is you have to be very rigorous, very shrewd in terms of your diligence process, right? You need to be very cognizant, and see, essentially we are also, mapping a lot of the industry's expectation. For example, the industry says, okay, right now B2B SaaS is something that we want, right? We start finding B2B SaaS. Okay, B2B SaaS, if we would prefer if they're post PMF, we'd prefer if they are, if they have good traction, right? We'd prefer that, which means we can't look at very early stage companies, right? Now, okay, we'd prefer companies which are making revenue. Okay. That job gets a little difficult. Okay, we'd prefer companies who are, let's say, who have decent, commercialization, who have decent cash flows coming in, but who have good AC, who have good contract values, right? Which means कि contracts अभी sign हुई हैं, but they have not got executed yet, right? And execute जब होगा उसके बाद, the cash inflows start, which means उसमें there is still time. They'd prefer companies like that. Okay. They'd prefer companies, B2B SaaS is, you're selling software to another business, right? So essentially, we would prefer, businesses to which, this software is sold to be, let's say 40-30% Indian companies, but more of, let's say, European companies, because the ability to charge a premium to them is higher, right? And there is more of integration involved while you're, working with those kind of clients. So, there are many hundred other factors to it. So essentially, that is what we are doing.
Initially, you mentioned that various startups fail to raise funds in India on a yearly basis, right? So, two questions here. Firstly, why do startups fail to raise funds? And second, what opportunities or what sectors do you see picking up and booming in the next, let's say, 5 years in India?
Okay, great question, Sanskar. I'll take the first one first, right? Why do startups fail to raise funds, right? The host of discussions that we have had, right? All of that point towards you being a great opportunity, but you also being the right kind of opportunities, right? And that is a function of many micro and macro factors, right? There are great products, there are great businesses, but let's say they can't promise a certain kind of returns which the investor is currently seeks, right? There is also a lot of stigma which helps you make safe bets, right? And statistics, right? And this is not something which I'm saying. So essentially, one of the stigma is that, okay, if the founder is an IIT IIM, I'm not talking about the other aspects of a founder's pedigree, right? I'll come to the founder's pedigree. But if a founder's IIT IIM, that essentially means it's a safe bet. May not be a visible bet with respect to how he or she has structured the business, but it's a safe bet. Small thing like a founder pedigree, right? Founder's pedigree essentially means the various parameters on which we evaluate founders, right? What kind of education they've had, what were their disciplines of study, right? After the graduation, do they have work experience? If they have work experience, I'm talking about work experience, but corporate experience, right? What kind of industry did they service? Do they have reputed logos on this CV with respect to the kind of corporates that they worked in? If they worked in corporate, right, what line of work did they work in, right? Does it align with what they're doing right now? If it is, that essentially means that you're taking a visible bet, right? Which means they are better aware as compared to other founders who are trying to make a similar kind of product in the similar kind of business, in similar kind of industry, right? If they had corporate experience, fancy logos, right, are doing currently something which is also something which they did in the past, right, or of some form or of some nature, right? These are all good points. If the founder previously did other entrepreneurships as well, had other ventures, an even greater sign, there were founders who had businesses, built businesses, sold businesses, which means they gave returns to their investors on the cap table, phenomenal quality, which means they understand how the VC ecosystem works. So this just increases, our cohesiveness to work with them, because it just means that a lot of the times we will be discussing something, and let's say 90% of the time wouldn't be wasted on explaining them the context behind things, because they already know how things work, right? Founders who have sold businesses, founders who have built businesses but probably at the wrong period of time, we understand, we take all those factors into consideration. Founders pedigree is one, right? So college dropouts seem like a very neo concept in India, right? However, it's fairly uh, appreciated in the West, so to speak. One of the I'm just looping one thing, and one of the challenges is also to segregate a lot of what happens in the West, what happens over here specifically in India, and why certain things don't make sense, right? Which a lot of people in the industry lack the ability to filter that out, right? You can't look at everything that's happening in the West and try to replicate that in India. It doesn't work that way, right? India as a country, it's very rich in culture, very nuanced approaches, right? It will not work that way. So anyway, coming back, right? Founders pedigree is one. Second is, what are the macro things about the market which is telling you? 2021, great time for companies. I'm not saying companies should be funded, shouldn't be funded, but there are ventures. When we evaluate, right, we also go back into the when we have some time into our hands, which is very rare, when we are trying to do some more qualitative creative work, right? We try to see, okay, when this company was funded, what were the market conditions? What led to this company being funded by this particular fund? What was this fund's expectation at that point of time? All right. In a year like 2021, which was a year of upcycle, right? Companies were getting funded left, right, center without commercialization. Product is 40% ready, getting crazy valuations. A lot of those companies are nowhere to be seen right now, which means those investments from those VCs have been written off, right? As compared to right now, it's a very capital conscious, it's a buyer's market right now, but it's a very capital conscious market right now, right? Which means you can't command whatever fancy, high, crazy valuation and expect that the investors will buy it. They will not, right? So you need to be very conscious of your approach, right? And in whatever I've spoken up till now, this ultimately, trickles down to execution and approach. How you approach the right founder at the right time with the right narrative. The answer to the second question, right? What kind of sectors will boom in the next 5 years, right? One interesting thing that's happening in the ecosystem is nobody's talking about 5 years now, right? This started from the start of this year only. We stopped welcoming projection sheets which were 5 years long, right? investors stopped welcoming projection sheets which were 5 years long. Simply being, there is so much of disruption that's happening, right? 2 साल बाद क्या tech रहेगा, क्या चीजें रहेंगी, nobody can predict that, right? What you need to be able to predict is, again, the probability with which you have taken the safe and the visible bet, right? And even that's a question which even I can't answer right now. Okay, because see, the sunset sectors of this year may become sunrise sectors, 2 years later, and may again become sunset sectors, in 5 years of time. When we were studying business, right, we were told ki businesses essentially run for 20-25 years, and then they after reaching their maturity they decline and they die. वो 20-25 साल 90s में था. Now it's not even 10 years. And now it's not. Every 12 or 24 months, you need to keep innovating. You need to keep improving your execution, improving your tech, everything's just so that you can stay ahead, right? But see, I'm extreme. I will always be bullish on health, right? And when I say health, I'm talking about healthcare, health tech, biotech, everything, right? I'm also extremely bullish on energy, right? I'm very bullish on EV, right? And I'm not just talking about electrical vehicles. I'm talking about solutions for electric vehicles, right? Charging infrastructures, again, again, I told you, right, which comes into energy, which also comes into sustainability, many of these aspects. So somewhere or the other, 3 broad themes that I'm very bullish about will remain health, will remain impact, and will remain, anything and everything that comes under the canopy of deep tech, which means very innovative, very let's say high on engineering, high on patent, high on all these things. So these are, because again, this gives you an edge. If you can support these ventures today, they might become solutions of the 5 years that you're talking about, right? Which means, at that timeline, that can be the next disruption. So as much as we are in the business of making great returns, we are also in the business of creating news of tomorrow, creating solutions of tomorrow. So the question is, you can't shy away from always placing safer and visible bets. You have to make yourself a little comfortable, have some of these companies in your portfolio, because again, as long as I understand it's a fiduciary duty of the of the GPs to guarantee a certain amount of returns to the LPs, right? But as a country moving forward, right, businesses are going ahead, but what about disruptive solutions which are much far from commercialization, much far from any kind of investor interest at an early stage? What about them? They should also come forward. That's the reason why these are the top 3, I would say, broad stroke canvases that I would like to say ki, health, impact, and deep tech. Yeah.
Awesome. Thank you so much, Krishna, for coming here, sharing your insights and experience. I enjoyed it and learned so much, and I hope the audience did same as well. Thank you so much.
Thank you so much.